Good Wednesday afternoon to you. Welcome to the Jon Sanchez Show on News Talk 780 KOH. It's a pleasure to be with you and a pleasure to be with my partner, Jason Gaunt of Sanchez Gaunt Capital Management. Happy Fed Day, my friend.
Yeah, happy lots of things today. Yeah,
Fed Day, earnings day. Yeah, it was all thrown at us today, wasn't it?
yes, a lot to consume, a lot to consume.
Lots to consume. Yes, indeed. Well, with that said, let's get the ball rolling, my friend, because again, we do have a lot of things to share with you today. Of course, earlier today we did have a Fed interest rate decision, and as anticipated, the Fed gave us a 0.25% interest rate cut. But, the street's pretty smart. There was almost 100% probability that that was going to happen anyway. So no surprise there. But as we've been talking about on this program, on the stock updates, et cetera, talking to our clients, it's not what the Fed had to say. It's what Jerome Powell had to say at the press conference 30 minutes after that Fed announcement came out. And I guess we can kind of summarize, Jay, by saying they weren't too happy with the Fed chairman. Just to be a little bit blunt, and we'll go through some of his comments, but there was one sentence that the chairman said that just tanked this market. It did rebound a bit, but it didn't like it. And let's tell you what it is. Here's what the chairman had to say. Remember, folks, Wall Street, as I always like to remind everybody, and Jason does too, Wall Street is a bunch of spoiled brats, right? If they don't get what they want, they start pouting, they start throwing a temper tantrum, or what we call a taper tantrum. And obviously, the way they begin to pout is they start selling things off. And the algorithms went absolutely nuts today as the chairman was speaking. But back to my point. So the chairman had one sentence in regards to the December interest rate cut, because again, we knew this one was going to happen. The street was basically had a little or almost between 90, about 90. I'll look at my notes here. 90.9% to be exact. 90.9% probability built in that we're going to get a December rate cut. Want to take a guess what that probability is now, Mr. Gaunt?
Hold on, let me get a quarter. It is a coin toss, I do believe, correct?
0.2% probability.
Wow. Yeah.
0.2. All because of the following sentence, folks. You ready for this? A further reduction in policy rate in December is not a foregone conclusion. Far from it. Let me repeat that. A further reduction in policy rate in December is not a foregone conclusion. Far from it. That's all it took. And I don't care what other positive comments the chairman had to say about the labor market, about the massive amount of AI spending, Jason, about all the positives that are going on. All the traders, and who we know as the algorithms, focused on was that sentence. I mean, here comes the CNBC headlines. Fed not ready for December rate cut. I'm like, are you serious? What? How come people just, again, back to the doggone algorithms, how come people just don't realize this is the game that the chairman plays, right? He has never, if we came into this meeting and said, it is a guarantee that we're going to have a December rate cut, meaning those words were going to come from out of his mouth, we'd be foolish, right? You and I have been around this game too long to know they will never, ever tell you. We're data dependent is all they will ever say. So take it away.
Yeah, it climbed back to 65%. Earlier today, it was 54. That's where I was using my coin toss joke. Yeah, I mean, the other part too is the quantitative tightening, right? They mentioned that their balance sheet runoff is stopping, right? So that's part of it too. It wasn't necessarily consensus that they were going to do that, which to some extent is, remember, almost viewed as half a rate cut, right? By the fact that they're not selling bonds into the market and essentially creating more supply, that caused a little bit of a move too in interest rates. But the Fed is, I think you've seen more differences of opinion on a board, which I think is dynamite to see. I think we should be down 50 bips, or I think we should be raising, or we should be doing nothing. It's much better to get that than a true bunch of puppets that are all wanting to do the same thing. So there's a lot of, it's a inconsistency of opinion, which goes hand in hand with that and the political climate that we're in right now, where there's a lot of different opinions to what the right answer is, and time and will only tell who's right. But yeah, today's move did all the things that I would expect, right? If the Fed is going to say what they did and cause rates to move up. So rates moved higher today. while the Fed was cutting rates, right? And that's the thing that we've talked about a lot is it's already discounted. So small caps underperformed. You saw the dollar strengthen today. You saw some at least pullback in some of the early strength in the gold and silver and those types of things. So, these are good tells. I like these kind of days. I like to see how the market reacts when unknown, I know I'm nuts, when unknown news, not unknown, right? I mean, John, you're spot on. They always try to play this game, but when they say something that causes the bees to hover a bit around the bonnet, right? And this is something that every investor should always be doing. The easy days are the ones where the market, they cut rates and say we're going to continue to cut and so on and so forth. You get what you want, and there's not really a lot to tell. It's more days like this where to say, hey, what acted weird today, right? So if you're an investor who thinks the Fed isn't going to be able to cut as much as the market thinks, go out and look around. What are those areas that didn't do well today? Maybe I want to make sure I'm not overly exposed to them. I'd say the market probably would have moved even more if we didn't have all these earnings after hours that we'll touch on later. So I think tomorrow will be sort of an interesting day as well, because you don't want to blow yourself up, puke in the market when guess what? The market is Meta and Microsoft and Google and all these names. You want to see what earnings are first. Now you've got that color, and you may start to see a little bit more of shifting of the proverbial deck chairs tomorrow.
And when Jason says we now have that color, and we'll go into great details about this, we did have Meta, Microsoft, and Google's earnings after the close. So if the Fed meeting wasn't enough to create volatility, wait till you see or hear what some of these stocks are doing in the after-hour session that I just mentioned. But I want to go back to a term that you just threw out. We haven't mentioned it in a long time, and that is the Fed balance sheet. Because again, this was the other thing that rocked the market a bit today, and why we saw the 10-year yield, surge 8 basis points to 406. The 2-year was up 9 basis points. The 5-year was up 8 basis points. But way out on the curve, the 30-year, it was only up 5 basis points. Again, that shorter end of the curve, that 2-year, 3-year, 5-year, et cetera, that's where the action was. So what is the Fed balance sheet? So just like a corporation, a balance sheet are assets and liabilities, right? And that equals a net worth, right? Those two subtracted together equal a net worth. Well, we all know at the peak, the Fed's balance sheet was north of $4 trillion. This is when they were trying to bring interest rates down a few years ago, right? During COVID, et cetera, they would actively go out and they would buy mortgage-backed securities and other types of things to drive interest rates down. And they were targeting the housing market, hence why they did mortgage-backed securities, Ginnie Mae's, Fannie Mae's, and so on and so forth. But when did the shift start, Jason? I was trying to remember before the show when they announced they were starting to let the balance sheet roll off. But what's it been now? Maybe 2 or 3 meetings ago?
I mean, it's been since they been lowering, right? You tend to those go hand in hand, that they're not going to constrain the balance sheet runoff while they're also lowering rates. So they tend to move in lockstep. I think we're getting to a point now, right, where, not trying to be a bear, but why does the Fed slow down their balance sheet runoff, right? Where if they
I got an answer, my opinion,
be a buyer of mortgage-backed securities at some point, because lots of pundits are frustrated in the fact that we can't get rates any lower despite on mortgages, like Dwight would attest to, despite the fact that the 10-year has gone lower, right? Well, how do you do that? What drove rates lower last time? You had a hungry hippo of the Fed buying mortgage-backed securities. So before they can start buying them, they need to stop selling them. And so this could be sort of a natural transition towards a stimulative move of some kind if they need to help support housing or that part if they see something on the horizon, right? Housing's stagnated in lots of areas. Even though you've seen refis pick up, you haven't seen a lot of, unless I haven't been listening, Dwight hasn't been jumping down, clicking his heels with a ton of buyers coming in, buying the snot, him and Corey, of houses. It's more of a little bit of a refi wave, but not a big purchasing wave.
Yeah, we had a big run up last week. We had Mortgage Bankers Association data this morning. Showed a big uptick. I mean, because rates
refis. Refis, right?
I didn't see what the breakdown was. I can't answer. I'll look that.
But I think that's part of, like, there's been some chatter that the Fed may become at least a buyer of some kind, but certainly, not as aggressive on the sell side. And in this case, they've announced that now that they're going to be out of the way for a while, just to see how the market itself acts, right? If you have a big seller all the time in the market, you want to see what the market looks like if you're the Fed without them there. And so I think that's part of what they may be doing, just slowing down that quantitative tightening and let the economy not have them be involved. See what that does to mortgages.
Yeah, I'm going to take a little bit different take than you. I agree 100%, but I'm going to throw my opinion in of why I think they did this. And again, we'll go back when we come back from this break and explain a little bit further what this balance sheet is, because this was probably as important with this announcement of what they're doing with their balance sheet as the 0.25% rate cut. So we're going to go into some more details, but first, let's turn it over to Kristen Snow right now, Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH on this Fed interest rate decision day, balance sheet runoff, and oh, by the way, Microsoft, NVIDIA. They kind of go hand in hand when you say
Creature
Microsoft. Microsoft, Meta, and Alphabet earnings numbers after the close. And we will go into, we need a whole entire segment for those earnings numbers because, again, there's a lot of activity going on with those stocks in the after hours. So we're going to save that for when we come back from the bottom of the break. But now we're going to go back to the Fed interest rate decision. So once again, as anticipated, the Fed did give us a 0.25% interest rate cut. The street didn't like it. Like I said, I mean, we were during Powell's press conference, we were plummeting. We were down well over 200. We had a few interesting notes. I always like to track this. And again, just picking on the Dow side of things. So prior to Chairman Powell beginning his speech, the Dow Jones Industrial Average was up 42 points. When he finished, it was down 96. NASDAQ was up 134. When he finished, it was up 92. S&P was up 11, and the S&P down 7. So, yeah, like I said, a lot of volatility, but that's just where we closed. Like I said, during his answering of the press questions, it was up and down and all over the place, which is very typical. So now we're again going to go a little bit deep with you. Besides, okay, big deal, a 0.25% cut. Yeah, you should start seeing. I didn't get a chance to check prime rate. We maybe already had an adjustment to prime. So this is going to help some of you, like with credit cards, and if you have some liabilities that are tied to prime, so on and so forth. We did not, however. Let me get a fresh quote here. Because when I looked not long before the bond market closed, or excuse me, when the stock market closed, we didn't have much move in the 30-year mortgage. Yeah, well, good thing Dwight's not here today. 14 basis point increase in the 30-year mortgage. Now it's 6.27%, and again, 10-year was up for 8 basis points. You're talking almost doubling of what the 10-year did today, Jason, on the 30-year mortgage. This is now that you know what the mortgage market did, which looks at the 10-year, but more importantly is based upon how the mortgage-backed securities trade. So now let's take you back to this crazy thing called the Fed balance sheet. So I'm not even going to come close to try to explain it because, Jason, I wish I had the recording on during the break because you gave an excellent commentary on what's gone on there. So I want to kind of lay the table, and then I'm going to let you go back to your institutional days, where, again, you got a better understanding of this than I did. So what the Fed said was they're going to cease the runoff of their Treasury holdings. Okay, so they own these bonds, and what that means by ceasing the runoff, that means instead of when the Treasury comes due, instead of taking the proceeds and going back and buying more Treasuries, they're going to take those proceeds and do something else with them, right? The Fed said the reason they're doing this is they detected evidence in overnight lending markets that banks were no longer awash in surplus cash. Because remember, folks, when a bank has excess capital surplus, they can lend it to another bank, which is the Fed funds rate that we're talking about, or they can deposit it with the Fed. And we've joked and kind of criticized the Fed many times over the years because it's very, very profitable to park your money with the Fed. And again, it's last time you and I talked about it, I don't know where it is now, but I think it was right around 4% or something like that. It's like, hey, not bad money, risk-free money, right? You're parking it with the Fed. That's risk-free money. So again, back to what they said today. They're going to let the runoff of the Treasury holdings because they detected a surplus of cash with no longer a surplus of cash with banks. Now, the Fed's going to continue to shrink the holdings of their mortgage-backed securities. So again, these mortgage-backed securities, they're going to continue to let them run off, right? So now the Fed is no longer stepping up to artificially keep mortgage rates lower than they should be. Hence why the 30-year shot up like it did. But they're going to replace maturing bonds with short-term Treasury bills starting in December. Now, short-term Treasuries and things like that, again, if I go back to the short end of the curve, Jason, 2-year today, up 9 basis points. 3-year was up 9 basis points. Those were the highest of all the various maturities as far as the daily increase. Now, go into your explanation about dollars and all the craziness that really goes on behind the scenes.
Yeah, I mean, again, ultimately the Fed is issuing bonds, or in this case, they're allowing bonds that they hold to mature. Typically, they'll go out and do something either with the money, or like you'd mentioned, they're now focused more on the short end of the curve, which we're going to just say is more them parking it, right? They're not really doing much with it in terms of stimulus, et cetera. And the fact that the banks, in the term of being awash in excess liquidity, right? The simple way is when you issue a bond or you sell a bond, when the Treasury, not Fed, but Treasury is selling bonds, that mechanism takes dollars out of the system, right? In order to buy a bond, what do? You go write a check and you spend your $100 on a bond, and now you own a bond. It's paying you 3.5% or 4% a year, but you don't have those $100 anymore, right? That you
paid
aren't
the Fed
using.
for them.
Yeah, you're not using it to go out and buy gas or groceries or do other things that then the guy who owns the grocery store, right? Yeah, that sort of compounding effect. So by them Treasury issuing debt, that is pulling dollars out of the system. And same thing in the case of the Fed, as the Fed is running off their balance sheet vis-a-vis either selling bonds into the market or just not redeploying that capital back into the market by buying other things. They're pulling liquidity out of the system because it's just going to be parked in treasuries, right? It's not going to be buying more bonds from other people in order to keep that flow of funds going. And they've been active on that for a long time. And so the thought is, like the analogy we were using during the break was throwing a rock into a pond, right? It ripples for a long time. Now they sort of want to see what the level of the pond is, because the Fed's job is really threefold. It is price stability, unemployment, but that price stability part also links into just total liquidity, right? With us being the reserve currency, they do a lot in making sure that all the banks have adequate liquidity to borrow and lend and do cross global type transactions through euro dollar and things. So they don't want to pull too much liquidity out of the system because the system itself will clamp down, and then we have all those issues of overnight lending and some bank freaks out and such and such and such. But they're at a point now where as they slow down their quantitative tightening, so they're being less tight, right? They have been tight in running off their balance sheet, and now they're at least slowing the way they're doing it. I mentioned mortgages earlier in that, they did say that they're going to continue to sell them. But as I mentioned, I've heard chatter of that potentially reversing at some point. So I know they don't want to be mortgage-backed securities holders long-term, but if something did in fact happen, they would need to step in. So that could be a reason why they continue to at least run that part off. But there's a lot of interlinkages for sure. Again, it sounds pretty goofy and complex, but there's some great websites we can send you to. If you have any questions, just reach out to us and I'd be happy to forward them over.
As far as I'll read the Fed interest rate statement when we come back from the break. Then we'll get to those earnings after hours. But just keep in mind, we had two dissenters. We had one dissenter that actually was calling for a 50 basis point or 0.5% cut, and another dissenter that wanted no cut whatsoever. So it wasn't a slam dunk, among the Fed members there to give this 0.25% cut. And Powell's asked about that. He goes, "Hey, everybody's individual, and we try to think as a group, but everyone's entitled to their own opinion, and so on and so forth." But overall, as we'll go through in more detail, happy with the economy. Tariffs are having a little bit of a bite. Inflation's being stubborn. Let's see where some of the other takeaways. The immigration issue going on, people being deported, starting to have an impact in the jobs market. Definitely continued. You had a few remarks and various discussions with the press indicating that AI is taking jobs, so on and so forth. He said he was asked about all of the AI data centers being built around the country. He said they're not interest rate sensitive, meaning, hey, you cut rates, is that going to spur even more activity? And he a couple times he said, bottom line, this is Wall Street money that's building these things. They don't care if the Fed cuts rate 0.25% or not. They're making enough money, et cetera. So, but anyways, those were just some of the highlights. Let's come back. Let's hit these after hours earnings numbers with Microsoft, with Meta, and with Google, and then we'll come back and wrap things up on the Fed side of things. Let's turn it over to Jack Saban, news, traffic, and weather. Hey, welcome back to the Jon Sanchez Show on News Talk 780 KOH with Jason Gaunt. All right, we're going to pause on the Fed side of things for just a moment and take you into the after hours session, and once again, let you know exactly what's going on with the big earnings numbers, again, coming in not long after the closing bell today with Microsoft, with Meta, and with Google. Once again, on the market side, we finished down 74 on the Dow to a close of 47,632. NASDAQ rose 131.55% to a new record. The S&P finished unchanged, which is so unusual. 6,008 is our closing level. All right, Mr. Gunn, let's say we get started. Let's go with Alphabet. Hit the numbers, digest it, talk about it, etc. So, folks, here's the numbers on Google. But first, let me tell you the performance of the stock, regular session, after hours, and then we'll backfill into the numbers. Regular session, Google was up $6.74. 2.51% to 275.17. Right now in the after hours, it's up $17.66, 6.42% gain, 292.83. So you guessed it, good earnings numbers. Here's what's going on. Revenue came in $102.35 billion. Estimates were $99.89 billion. Earnings per share, what a blowout here, Jason. $3.10. Estimates were $2.33. And let's talk a little YouTube. You have a nice stat before I get to the YouTube advertising revenue. Throw out that stat.
So Google bought YouTube back in November of 2026 for $1.65 billion in stock. November 2006, not 2000. Next year, but 2006. Yeah. 1.65 billion is what they paid for him. Google just had, through YouTube's advertising revenue only in just the third quarter, 10.2 billion. So pretty good purchase, I would say.
That was a good one. Yeah, that was a 100-bagger, right?
Yeah. Bananas.
Not to mention, that was just this quarter, not to mention just
this
what they
quarter.
made in other quarters.
Right.
No, it's I'm addicted to YouTube. I'm one of those. I know you are too. Yeah, 10.26 billion was YouTube ad revenue. Estimates for 10.01 billion. Let's go to the Google Cloud revenue. 15.15 billion. Estimates were 14.74 billion. Traffic acquisition cost 14.87 billion. Estimates 14.82 billion. Strong demand in the cloud business due to AI. Company also announced an increase in CapEx, or capital expenditure, for fiscal 2025. They're going to be spending between $91 billion to $93 billion in capital expenditures for again, fiscal year 2025. Looking out to 2026, they expect a significant increase in CapEx and will provide more details on the fourth quarter earnings call, according to their chief financial officer. So good numbers on Google, and again, stock performing as it should in the after-hour session. I wish we could say the same type of good news for the other two that reported. Let's go to Microsoft. Here's what the stock did in the regular session. Here's what it's doing in the after hours. Regular session down just 52 cents to 541.55. Right down the after hours, it is down $19.71, a 3.61% loss to $522 a share. They took a $3.1 billion hit to their net income in the first quarter due to the company's hefty investment in, what do you think, Jason? Where do you think they'd be spending $3.1 billion in a quarter?
OpenAI would be my guess.
There you go, my friend. You're a genius. I told you were. Yep. OpenAI, $3.1 billion. So again, 41-cent hit. You'd think Wall Street would put that aside, but no, they're punishing the stock. Income, phenomenal, rose to $27.7 billion, about $3.72 a share. A year ago, they made $3.30. Rev came in at $27.7 billion. A year ago, $24.67 billion. And if you don't think that they're tight with OpenAI, think again. Since first backing OpenAI in 2019, Microsoft has committed to invest $13 billion in the company, with $11.6 billion already funded as of the end of September. And again, remember, this comes just a day after OpenAI announced that they've completed a recapitalization, which cemented its structure as a nonprofit with a controlling stake for its for-profit business. Nonprofit, now called the OpenAI Foundation, holds an equity stake worth a mere $130 billion in its for-profit arm. So it's pretty remarkable. Again, Jason, I think this is where people will take a deep breath and go, okay, we know they're investing a lot in OpenAI. 41 cents a share hit. Okay, big deal. They still made $3.72 of $27.7 billion. I think calmer heads will eventually prevail, but right now they're just out of their minds in the after hours.
It's the Azure, the sort of cloud services number that which most of the analysts watch.
Today.
Every quarter they've beat estimates by 3%. So it was 39% constant currency versus 37. Street was expecting, literally like 40 or 41%. So I think that's the thing that more than anything, just near term reaction of sell the news. But I think you're right on the calmer heads part. This company, one of the analysts was on CNBC today talking about the stranglehold that this company has on enterprise AI usage in that they're embedded into everyone's Outlook and email and Teams and through Copilot, all these. And I think that people are just scratching the surface of using the product. So I'm not recommending anything, but that's one to keep an eye on that longer term proves to be a winner unless someone comes in and quickly changes the entire ecosystem. Right. The entire ecosystem that most firms rely upon for their daily.
So the point you're trying to make is we always talk about the Apple ecosystem, right? You buy an iPhone, next thing you know, you're buying an iPad, and you're buying more and more Apple products. It's that way with Microsoft. However, it's more essentials, right? We all use Microsoft Office unless you're a Mac user, and then you still may use Microsoft Office products. But as we talk about on Mondays with Dennis, if you're going to use Copilot, which the chassis of Copilot is ChatGPT, OpenAI's product, it talks to each other, right? You've created some amazing things that you're figuring out because again, as we announced on the show on Monday, we talked about how we're implementing AI in our firm. And I mean, you again, almost every day you're coming in and going, man, I just figured out this with, between,
it's crazy.
All the Microsoft suite of products and the AI side of it, how they're talking to one another, where a lot of times you can't do that if you're not using, the same Microsoft type of product. So that's pretty interesting.
For sure. And I think it's just going to continue to, it's not a big lift. It's not a big spend for companies to add in Copilot licenses or that, but you figure for Microsoft, it's a gazillion companies that are all spending, $20 to $30 additionally every month per user that will, I think, get things moving pretty quick. So they have a good long-term growth story for sure. And that's the thing with all these mega caps, right? I mean, Google, the amount of data they have, and Gemini is taking over their ad world, right? Where they're able to internalize so much more now and direct that shift that wasn't there in the past. So it's incredible.
Well, the last thing, and then we'll go to break on Microsoft, and then we'll come back and talk about Meta's numbers. Microsoft now owns their stake. Let me rephrase that. Their stake, Microsoft's stake in OpenAI, is now $135 billion, about 27% of the company on a as converted diluted basis. But Microsoft said today on their conference call, Jason, OpenAI is a quote from Satya Nadella said it. He said, OpenAI has contracted to purchase an incremental $250 billion of Azure services. So that's, folks, Azure's the cloud service of Microsoft. So OpenAI is contracted to purchase $250 billion, and that Microsoft will no longer have the right of first refusal as a computer provider. Nadella
There's your circular accounting.
There's this. Yep, exactly. There's the circular
John's circular accounting. Wait a minute.
Round and round she goes.
Wait, that's your right pocket and leverage and left pocket. Wait, huh? Carry the four.
Not going down that path. People yelling at me, being a negative, but
I agree with you. So
you know my feeling on that.
I'll fight with you.
There you go. Make me look good. Nadella also called the relationship with OpenAI, quote, one of the most successful partnerships and investments our industry has ever seen, adding that we continue to benefit from each other's growth across multiple dimensions. So with all that said, folks, because again, they took a 41-cent hit on the earnings because of their investment, we can't tell you what to do, but hopefully, like we said, calmer heads will prevail eventually, but not quite yet. Stock's still down a little over $19 after hours. All right, final big cap earning was Meta. We'll tell you what those numbers did in the after hours and what's going on when we return. Let's turn it over to Kristen Snow to wrap us up in the Right Now Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on Newstalk 780 KOH with Jason Gaunt. Once again, we finished down 74 on the Dow, rose 131 on the NASDAQ, and a decline. Actually, let me rephrase that. It wasn't a full 1 point, so I'm going to say it's unchanged on the S&P 500. All right, a couple things that we keep thinking about. So once again, as we just went over in the last segment, we had Microsoft earnings numbers. We had Alphabet / Google's numbers. We're going to tell you about what Meta did. So those were the three that reported after the close. Let me tell you what the futures are doing right now. Again, very early. Dow futures down 52, NASDAQ's down 57, S&P's lower by 7, coming way off the lows that we experienced, even though they just started trading, nearly an hour ago. But as Jason and I were chatting off the break or during the break, keep in mind something that may come hopefully to the rescue of the market, since it's kind of reeling on these Microsoft and Meta numbers. The president is meeting with President Xi of China. The meeting is supposed to occur, at least according to all the news sources I found, at 7 p.m. our time. So 7 p.m. Pacific Standard Time is when they are meeting, which obviously is tomorrow for them. Once again, some things kind of leaked out. Looks like today China made the first soybean purchase. So that's a good step. So hopefully we'll get some more details about that, get some more details about the rare earths. Trump coming back, maybe some indications are that he may completely eliminate or lessen the 100% tariffs that he recently announced. Remember, they're total 157% tariffs, but hey, we'll take that 100% back. You just be at 57% tariffs, so we'll see what happens there. All right, so that could be a good savior, and then we got some good earnings numbers after the close tomorrow. Now, back to the final big mover, which is Meta. Regular session, it was quiet, 23-cent gain is how it finished, 751.67 a share. Right now in the after-hour session, it is tumbling down $55.67, 7.41% loss to $696 a share. Why is it tumbling? Well, let's get to the details. Earnings per share, $7.25, estimate $6.69. Okay, beat. Revenue, $51.24 billion. Estimates, $49.41 billion. Beat. The problem? Jason, it's the one big beautiful tax bill.
Yeah, that's an interesting stat. So how did that work? They had a charge of some kind?
I can't figure this out, but Mark Zuckerberg on the conference call said that because of the one big beautiful bill, it resulted in a one-time non-cash income tax charge. Company said they expect Trump's law to result in, quote, a significant reduction in U.S. federal cash tax payments for the rest of 2025 and for future years. Third quarter sales were up 26% year over year, which is the highest revenue growth since the first quarter of 2024. The CapEx, Jason, you were talking about that. I love your comment. Mention that to the audience.
Yeah, I mean, just, their CapEx guidance for Q4 is 56 to 59 billion, and they expect it to be higher next year. I said Meta seems like the only company in this AI arms race that when they raise CapEx guidance, everyone freaks out. Like that was the story back with them 500 points ago. If you're watching, actually, the stock traded down to $90, I recall, at the lows back when people thought they were overspending on Reality Labs and all those things, which, as John, you mentioned, what the heck do they do? And I said, it seems like they just burn money or something.
They create the VR headset.
Right, exactly. That thing makes you like seasick.
They lost $4.4 billion.
Yeah.
All right, we got to run, unfortunately. I went way too fast. All right, we thank you for joining us. God bless. Have a great afternoon. We'll see you tomorrow on the Jon Sanchez Show.